Ma'am, we are live. You can start.
Okay. Hello? Hello?
Please start.
Okay, so can I start with my discussion that I was supposed to be speaking today? Okay. So hi everybody. Good evening. This is Seema Chingan and I'm a lawyer. So considering that I come from a legal background, I will be discussing some of the nuances of legal issues and disputes, and specifically the common issues that the franchisees suffer or face while having a franchise relationship with the franchisor. So considering the COVID situation right now, I think the future of the Indian business lies in franchisee, whether it is digital franchising or brick and mortar, it's everybody's guess. But let's look at some of the nuances related to what should you, if you are a franchisee and you're looking for digital franchising right now, or for that matter, any kind of franchising, what are the issues that you should be looking at going forward. First of all, you should be looking at territorial demarcation of your franchise. Most important is if you have taken a franchise, whether it is of services or products, it's brick and mortar or digital, what you should be concerned is the services that am I providing, is it limited to a particular territory, or the territory of operation is large. So demarcation or the territorial integrity of your contract is very important. And that's something that you should be focusing at the time of negotiation. What it basically means is that the scope of operations of a franchisee at the time of starting his operations, whether it is North India, it is South India, it's 5 kilometers within your region, depending on your product and services, you should be very clear that you look at that aspect very, very carefully at the time of entering into your negotiations with a franchisor. Second issue is licensing of the trademark. The concept of franchising is an embedded part of the concept of franchising. Now, here there are a lot of obligations vis-a-vis the protection of the IPR rights of the franchises. So therefore, the scope and the purpose of your franchise arrangement, the licensing arrangement, the brand license usage, the know-how usage arrangement should be very, very clear. Which basically means that you should be clear what is the duration of your franchise license arrangement, what is the scope, what is the purpose, what kind of transfer of know-how or license of know-how you're getting as part of the franchise arrangement, and what are the obligations of the franchisers when they are getting into this sub-license or license arrangement with you. It's very, very important because it can have serious financial, pecuniary and liquid damages kind of repercussions in case of non-compliances. Now, the obligations of a franchisor and a franchisee under a franchise agreement are something very, very critical. A well-drafted, a well-crafted franchise agreement is a must that you should be looking at the time of your entering into a franchise relation. Now, what are those obligations? What are the specifics that you should go at the time of discussion when you are at the stage of entering? Some of the highlights of a franchise relation should be, what is the investment in the infrastructure that you would be required? Now, whether it is digital or it's non-digital, are you supposed to have a particular level of investments? What are the infrastructure requirements? Is it a uniformity of application of services? What are the reporting requirements as a franchisee for you? What are the quality maintenance obligations that you have to comply with vis-a-vis the franchisor? All of that, whether you have a right of appointment of a subcontractor or not, these operational flexibilities vis-a-vis the operation of a franchise relationship is very, very critical. In addition, you should also be looking at what are the roles and responsibilities and obligation of a franchisor. For instance, does he have any responsibility of giving you any training? Does he have any responsibility to handhold you with back-end support? with administrative support? Will he be supporting you in certain technology upgradation positions? All of that is important. Sometimes there is a annual marketing penetration targets, minimum stock purchase targets for a franchisee. Be very careful that you have discussed all of those issues very carefully with the franchisor, so that there are no hidden surprises or hidden expectations that you were not aware when you signed the franchise agreement, that comes up into the relationship after 6 months or 3 months down the line and causes havoc to your operations. The other very critical aspect is, what is the payment term you have? Are you going to have a lump sum fee given at the beginning of the contract? Are you going to have recurring royalty fee plus a minimum guarantee? I would suggest during the COVID, as you've seen the way businesses have collapsed right now, during COVID and post-COVID, minimum guarantee should be completely avoided. The revenue, sales, and royalty should be both correlated. So, which basically means that your expectation of the franchisor to receive revenue should be based on the sales revenue that the franchisee is generating. So, minimum guarantees and lump sum annual payments, which is the fundamental of a franchise arrangement, if possible, that should be also avoided as much as possible. Then the tax structure, the withholding tax in the payments, the interest elements on the delayed payments or non-payment should be very, very carefully understood while doing the franchise arrangement, so that you don't have you have clear understanding that your delay in making payments can lead to certain invocation of interest. What is the other thing that you should be very carefully negotiating in a franchise arrangement is, what are the termination clause, and most important, the renewal clause. You know, like, coming from my experience in advising a lot of franchise and franchisees, one of the most important issues is, after the expiry of the initial franchise period, which is sometimes 2 years or 3 years, there is no automatic renewal given. Usually the franchisor has the upper hand in renewing your franchise, which could be based on the terms and conditions of your annual targets that you have achieved. It could be based on the revenue sharing that you have done. It could be based on general performance of your franchise. Be sure that you have possibly more fixed term contracts. For example, you have a longer term franchise which recoups your investments that you have made and the training that you have given to your employees. So 5 to 7 years of minimum franchise agreement, tenure agreements should be looked at. Plus, the renewability has to be specifically focused, that you have the enablement and the capacity to renew the franchise arrangement in a ease. A lot of franchisees have faced a lot of problems going forward at the time of renewal and leading to termination and collapse of the arrangement. So that's not something which should be looked at. Then when you're looking at the termination options, sometimes the termination says, I can terminate you as a franchisor with 3 months or 2 months of notice. Now that's something that you should not agree, because and then they also have arrangements where if there is a breach, then you can be terminated for 15 days. Now these are the arrangements, or these are the clauses that you must avoid, because you would have spent like 6 months, 8 months training, putting in a lot of infrastructure, in employing the your staff and creating training programs and modules for them, and suddenly after 1 year the franchisor decides not to continue with you and terminates you for convenience, let's say by giving you 3 months notice, or terminates you for so-called breach of yours. There could be many breaches, and so-called breaches of yours with 15 days notice. I think at that point of time, it is very important that as a franchisee, you negotiate a minimum 6 months to 9 months termination clauses for convenience. And even if it's a case of a breach where you have breached the contract, you should be given, let's say, 3 months notice for cure, so that there is a rectification period and leading to the breach. These are the issues that you should be carefully negotiating. Another aspect that you should be looking while at the time of entering into the franchise arrangement is, what are the restrain periods, which is a non-compete clauses that you've agreed while entering into a franchise arrangement. Basically, non-compete means that you will be, as a franchisee, not authorized to compete into similar services or products during the term of the contract you have with the franchisor, which is fair, which is acceptable, and which is enforceable under Indian law. But if they are asking for post-termination restraint period or non-compete period, be very clear on what are the restraints that you're imposing upon yourself. Because under Indian law, the restraints or the non-compete clauses are generally not enforceable unless those clauses are reasonable, are in furtherance to the public interest. So the reasonableness of the non-compete agreement is generally gauged from the tenure of the non-compete period, from the jurisdiction in which the non-compete has to apply. For example, if you are selling burgers as McDonald's and after the termination you're expected not to sell any kind of burger for the next 2 years, and during the entire landscape of India, that could be an unreasonable agreement, and it will be very difficult for the franchisor to enforce it. Specifically, so why is this unreasonable? Because A, it is in restraint of trade. You cannot be restrained in that. And secondly, if you see, they have given you a local jurisdiction of, let's say, Delhi to sell the burgers, and they're expecting you now to not compete for the entire India. So those are unreasonable terms, which you should be careful when you're entering into the franchise arrangement not to agree. Then post-termination, what you should be also be careful is what are the inventory handling post-termination obligations. A lot of time what we have seen in our handling of franchisors and franchises is that if it is a product-related franchise, the franchisee has a lot of products lying in its as an inventory, and the cessation of the franchise relationships require them to either destroy the product or cease selling the products, which can lead to a lot of inventory loss for the franchisee. So possibly a post-termination cooling period should be taken, where you have 3 to 6 months to clear out the inventory, sell the inventory. And usually there is a clause in the franchise agreement which says after cessation of the termination or cessation of the franchise agreement, you cannot use the IPR or the trademarks of the franchisor, which means that even if you have the inventory, you cannot sell it because you're going to be ending up using the IPR and the trademarks of the franchisor. So have a room, have a leeway within your arrangement where you get this post termination inventory handling capacity. Similarly, what could be the indemnification liabilities that you should be looking at? Franchises have this habit of having a extensive indemnification liability imposed on it, which is in addition to the liquidated damages. So under Indian law, you have two different concepts. One is the liquidated damages that you agree in case of a breach. And then there's an indemnification liability, which is an over and above in addition to the liquidated damages. And you could be caught on both foot wrongly. So be very clear of what you're negotiating vis-a-vis your indemnification liability. And that's also very critical. The other thing that you should be looking at is the governing law and the jurisdictions. A lot of time, the paying capacity of the franchisor is much higher and much larger. So what happens is they agree for an expensive, let's say an ICC or a expensive arbitration procedure, and it is jurisdiction which is not within your capacity. And in case where you have been wrongly terminated as a franchisee, you are then forced or compelled not to take legal action because you don't have the wherewithal or the capacity to go through an expensive arbitration, or you don't have the capacity to go to a different jurisdiction to litigate your matter, even if it is a court. So be careful on the laws that you agree for adjudication of your disputes and the jurisdiction that you have assumed. For example, the franchisor is based in North India and you are operating in South India, and the franchisor insists that all disputes and issues related to the franchise will be handled at New Delhi, which basically means jurisdiction will vest with the New Delhi courts to the exclusion of other courts. And that comes as really difficult for a South India-based franchisee who has been wrongly terminated to litigate in a different jurisdiction than his own place of operation. So be careful that issues related to jurisdictions and court proceedings are also looked at. So The fundamental when you get into a franchise relationship is that carefully look at every aspect, starting from your commercials of the exclusivity to the issues related to the payment and to the issues related to liability and indemnification, that everything should be looked at very carefully so that the agreement that is intended to last you for next 3 to 4 years holds good for you and upholds your rights and obligations. I'll be happy to have any questions if you want, or I can elaborate on any of the issues that I have dealt with. Because the time was so short, I have quickly gone through some of the quick points that should be looked at. But if you want me to elaborate on any specific point, I'll be happy to do that. Are there any questions?
I see, ma'am. Thank you so much for the session. It was really very insightful, and we thank you for this wonderful session.
Thank you. Thank you.
Hi, Mr. Manish. Can we have your camera on, please?
Yeah, hi.
Hi, great. And we are ready to start.
Perfect. Can you enable screen sharing so that I can share something about the company that I have? Is it possible?
Sure.
Thank you. May I also
Can do now, yeah.
May I also know how many participants are there right now?
We are live already now.
Perfect. Good evening, everyone. My name is Manish Lunia. I am one of the co-founders of a digital lending startup named Flexi Loans. And I think the idea today is to share with you the current funding environment, how young businesses can basically get funding, and then take any of your questions that you have regarding financing for your businesses. So what I'll do is I'll just take first 10 minutes to kind of tell a little bit what I have to share, including about Flexi Loans, and then probably leave it open for everyone to kind of have a chat around. Right? I'm just sharing the screen so that yeah. Yeah. So basically, I think Flexi Loans is a company which is so far served about 10,000 plus SMEs in 1,400 cities in the country. What we do is we do unsecured business loans pan India, and we also have partnered with a lot of e-commerce ecosystems like Flipkart, Amazon, card payment companies like M-Swipe and Pine Labs. We have products which range from unsecured term loans to supply chain financing to line of credit. And that's how we've been servicing. We've been recently featured as emerging 50 global startups in the world by KPMG and H2 Ventures in 2019. Um, just generally about the products that we have first. One, we do term loans of SMEs selling marketplaces for a period of about 12 to 36 months. Average ticket size is around 5 lakh rupees. The minimum is about 50,000 rupees and the max is about 50 lakh rupees. What the process is extremely simple. Any of you merchants sitting anywhere in the country can just go on our website www.flexiloans.com or our mobile app, put simple documentations around stuff, and in the next 24 to 48 hours, you will get a sanction or a reward regarding your application status. It's as simple as that. I think the topic for the day today then in the FRO summit is these are difficult times. Pandemic of COVID-19 has actually taken a toll on the financial strength of a lot of businesses. So what I'm here to share you is two stuff. One, about people with existing businesses and franchisees, etc. How can we manage this time, the next 3, 4, 6 months more, to kind of have a better credit profile? And the other is, how do we kind of get access to new funding? The first piece is regarding current staff. Now, all of us businesses will have to conserve cash at this point in time. And the government has, you must have heard about the moratorium that a lot of banks have, the RBI has allowed banks to provide to all the businesses in the country. It is specifically linked to businesses and then obviously goes to personal loans and so on. So one of the things that all of us should do is, in case we want to kind of have visibility around this, take the moratorium till the time your banks are allowing you, if you need funds, because it is almost similar to taking a new loan for those EMIs that you are kind of paying. Explain your bankers that this is your cash flow situation currently, and this is expected to improve by the September-October timelines, and you want to maintain your credit score in good health, and thus you're kind of right now requesting for a moratorium. A lot of banks would be very understanding around these matters, and your CIBIL score or credit score will also not get impacted. Point two, this is also a time to cut costs. So what you should do is reevaluate your businesses and see if you can take, or your people or staff can take a small cut in your salaries. Tell your vendors if you can actually reduce some cost or defer some cost. So for example, the governments have allowed electricity bills to be paid after 3 months. Governments are allowed to pay GST returns after a time, or only with a 9% interest rate per annum. So what you can do is defer some of these taxation, some of the payments, some of your vendor payments. Make a plan, communicate a lot with your partner ecosystem and say, क्या हम payment थोड़ा late कर सकते हैं? That basically gives you a lot of cash flow and visibility about your business. So it's extremely important beyond banking and lending कि आप अपने ecosystem से you take visibility out. The third thing, as I mentioned to you, is being frugal. Decide which is the most profitable business of your setup. Do only that business and do not chase growth. Fourth thing within this, see if you can get some advances for your products that you are selling right now. This also increases your cash flow. So these are 3, 4 things that one can do in this pandemic times to kind of take control of the cash flows from the existing schemes. For new businesses or new loans, there are, again, I will start with government schemes that are available, and then we'll come to players like us who are funding businessmen in the country, including franchisees, for new business loans. The first piece, again, I'll tell you is, if you are an existing borrower of any bank or NBFC in the country for a business loan or a loan against property, you can approach your bank for a special government loan that is called ECLGS, Equity Linked Credit Guarantee Scheme, which the government has guaranteed 100% for the banks and NBFCs. So if you have, say, theoretically a loan of about 10 lakh rupees outstanding as on February 20th, what you can do is you can get a loan of 2 lakh rupees additional from the same bank at a rate of between 9 to 14% only for a period of 4 years, in which for the first year you only have to pay interest, and for the next 3 years you have to pay the EMIs. This is an amazing scheme that the government has introduced. Most of your current existing lenders may be giving you this scheme. So if you have not spoken to anybody, please speak to your bankers and get the scheme done. That will significantly give you a low cost funding base. If some of your banks and NBFCs are saying that they are not able to provide funds for these, you can also go to your bank that is giving you funding and take a NOC from a bank which is not giving you funding against the scheme. Effectively, you can get the 20% credit line from the banks. Second is, the government is now very benign. The Mudra scheme is being requested by a lot of banks, the state-owned banks, etc., wherein if you go to your nearby state-owned banking system, with the right set of documentation, Mudra loans unsecured up to 10 lakh rupees are being given by a lot of state-owned banks. So you should definitely approach that. The third thing is, obviously, assuming now in this pandemic, many of us have varying degrees of businesses impact. For some of us who has business impacted by only about 20-30% and have not taken moratorium in the past, but now want to expand business, takes more loan, You can apply it to any bank and NBFC in the country, many of digitally mostly. Most of us are giving some sort of funding available today. So you can apply with your last 6 or 12-month bank statement or your GST returns and request for a funding. The good chances that you will get funding. For example, at Flexi Loans, anybody who's not taken moratorium and has similar range of only about 20-30% thing, there are 100% chances that the person will get funding. If your business has fallen substantially and has started seeing a pickup in the month of June, July, banks currently are being considerate and they're not considering the last 3 months of cash flows, which some businesses like Kirana stores or pharmacies may have continued. So जो last 6 महीना देखते हैं वो लोग नहीं देख रहे हैं, and people are looking at actually your current cash flows whether you've started business or not. So you should apply it digitally. There are websites like paisabazar.com. There are websites like flexiloans.com. You can come directly and we'll link you to many other banks and NBFCs and get you funding across the ecosystem. These are typically digital loans. Thirdly, assuming you are now a new businessman, a lot of banking schemes, a lot of people are not giving loans to new businesses or new stuff. That is the point in time you have to realize how critical is your fund. So if you're virtually just starting a business, try to see if you can do an alternate source of income. Now, one, you can go to state-owned banks, which are now promoting entrepreneurship. The other piece is, see if you can actually use a loan against property. A loan against property is just like using your property of your parents or your own, putting in a mortgage with a large bank, which gives you a 15-year loan. So theoretically, you have property worth 50 lakh rupees. And if you give it to a bank would give you a 40 lakh rupees loan or line for a period of 15 years. Now, which means your monthly EMI will be only about 40,000 rupees for a loan of 40 lakh rupees. Now, these are good systems for people who are starting new. These are difficult times and they're not able to get a loan on an unsecured basis or any other collateral that you have. So try loan against properties. That will be a very good source. Some of us can try loan against gold, which are very safe these days, very low cost rate, 12 to 14%. You get loan against gold. People come to your house, put in a vault with ICICI Bank and many others, Dena Bank, Deutsche Bank, etc. And all of these are all doing loan against gold. So if you have some gold reserves, you want to park it in your own safe and again get a loan around it. These could be different ways which I suggest you can have. The last innovative way is if you are selling to an ecosystem. For example, many of our customers actually sell directly to Flipkart on an outright basis, or many of our customers sell, for example, to a Reliance Retail or a Havels. Now, when they sell to businesses, you can apply for a supply chain financing wherein the day when you invoice, your vendor is actually paying you in 60 to 90 days, but we pay you the payment on day one. And at the end of 60 or 90 days, the anchor will make the payment back to us. So that's again a very good way. If your customers are paying you in 60, 90, 120 days, you can request for an invoice discounting with the help of both your merchant, which is a large corporate typically, and NBFCs or banks like us. So these are ways I think it's important. To summarize, I think what I would like to mention is, in these times, you have to ensure that the financial discipline, if maintained during this time of pandemic, will reap you good rewards, because about 60% of India has taken moratorium in various months, people who have taken loans. So if you maintain good track record, your CIBIL will stay strong. In 3 to 4 months, the country will have to grow. It is ultimately the business of our banks and NBFCs to give loans to good customers, and we'll all come back running to you to get loans. So make it a point, if you are a small business, that all your cash flows are routed via bank statements. You partner with brands and franchisees by which cash flows are visible. Also speak to your franchisee. For your franchisee partner may have partnered with a bank or NBFC for getting loans for new franchisees. Many such schemes are available in the country. So that can be tried. And last but not the least, I think you have to be resilient, save cost, defer cost as much as possible, and good time shall come. So this is what I wanted to share with everybody. I am happy to now take questions and engage with anybody to take this forward. Yeah, I'm happy if there are any questions around the topic.
Thank you, Manish, for the insightful session. It was a really insightful session. Thank you so much. It was pleasure having you for the show.
Thank you very much.